All right. Good afternoon, everyone. Thanks for coming. I know it's late in the day Eastern, but I appreciate you taking a few extra minutes out of your time and giving me an opportunity to share with you my voluminous amount of market data. What I want to do is ask a couple of quick questions here because, I'm a regular broadcaster with David on Timing Research, and I don't know how many people might be attending for the first time. Anybody want to go on record and say, this is the first time they've ever heard me speak or first time they've ever heard me as a broadcaster? Um, Maybe you've read a couple of my books. I don't know what sort of background you might be coming from. Anybody want to go on record with that? This is an open forum. David has been kind enough to change his modus a little bit, and he's providing us with something that's more open from a standpoint of how we can communicate. So we can basically talk about whatever you as the audience want to talk about. I'm going to kind of start the ball rolling with a couple of thoughts that might be new to you, but I hope that segues into a really strong discussion about what it is that we're all really trying to do here, which is pull money out of the markets, right? So that being said, I've got the chat window up. Anybody want to go in there and say hello and say hi? I've never heard you speak before, or I've read one of your books. I've got a question about such and such, so and so. I'd love to hear that. I don't know how many people are listening because I'm still kind of new to using Zoom, so I don't know where it lists all of the participants and how many people are attending. So feel free to go ahead and put a comment or question in there. Uh, Where are we at here? Nothing so far? Nothing yet? Okay, I guess you want to hear what I got to say. Well, let's do that. All right. So basically, to kind of get the ball rolling, my name is Jason Allen Jankovsky. I am a trader, a real person here in Bradenton slash Sarasota, Florida, currently. Originally from Chicago, Illinois. Did most of my trading in downtown Chicago. Did my very first trade at the Chicago Board of Trade, big board corn, 1986. So I've been trading for almost 40 years. Made and lost seven figures more times than I care to admit. And I've got extremely unique point of view on how to make money in this business that has served me really well. And I teach coursework on how to shorten your learning curve so that you can begin making some real money. And when I say real money, I mean real money. A lot of the times when I do broadcasts like this, both timing research, round the clock trading is one I've done. I've done New York Traders Expo, the Money Show. I meet all kinds of traders who are not doing that well. They're just not. They'd like to, but they can't for some reason. And I'd like to ask you a question. I mean, if you're serious about doing this and you're definitely trying your best to do better, um, if you're honest with me and honest with yourself, and you're not doing as well as you think you could, are you willing to consider that maybe there's a real strong reason why you can't make money doing this, or you haven't been able to yet? We can solve that problem together if you're interested. But at the same time, it does take a change in your paradigm of thinking. I've written several books on the matter. My latest, The Psychology of Trading, is actually available online. Best $10 you'll ever spend on shortening your learning curve on trying to become a net winning trader, because I tell it like it really is. And most people never really hear how it really is. And that's why you're losing. And if you want to change that, I can show you what you need to do different. And what I have to say is heavily vetted. But at the same time, we've got to have a starting point, and that is generally your point of view and why you think what you're doing is going to make you money. So let's talk about that. Um, RV says trading sucks. We trade on hope and fear. Well, if you want to trade that, or if you want to change that and start trading on confidence and probabilities, I can show you how to do that. So let's go ahead and get to work now that we've given just a few minutes to introductions and all the rest. So my business is Net Winning Trader. And what I want to talk to you today is about this: the problem of shared data. And the problem of shared data is going to lead you into a relationship with the markets And that's going to cost you money. And that's why charting will always lead to losses. And I know that's a strong statement. And there's a lot of people out there that really think that they're going to just read, study, and look at all these dots and ratios and lines and curly cues on a piece of paper, and you're going to figure out how this works and you're going to make money. Well, that's not going to happen. And for those of you that are really honest about this and really, really, really have been doing this for some period of time, you know that I'm absolutely correct about that. The charting really is nothing more than opinion. For everybody that's out there that's bullish, there's going to be somebody who's bearish, and you know that. And most of the time, neither one of them is actually accurate. So, what is it that draws us all into this losing format? How come we can't break through to the winning side and find out exactly what it is that will make a difference? Well, I'm going to help shed a little bit of light in that area for you. So, first of all, I want to do this. I want to mention to you the trading in futures, options, off exchange, foreign currency transactions, Forex. It's all considered a risk investment. Um, Everything we talk about in here is considered opinion. I'm not trying to give you financial advice. People can and do lose money. You need to carefully consider if trading is right for you in light of your personal tolerance for risk. Um, it's really important that you understand that, this is a serious business and you could lose money doing it. So you want to make sure that's money you can afford to lose. And in the meantime, now that the regulators are happy, let's go ahead and get kind of to work here. So, what is different? Seriously, if you want to win, what's different? Nothing. You need to really think about this when I share this with you. Everyone, everywhere is seeing the same thing. Everyone, everywhere is seeing the same thing. When I put a price chart up here in a minute, it's going to be the exact same data that you see on your screen, that every trader sees on his screen. Doesn't matter who that trader is, how long they've been trading. It doesn't matter if it's George Soros. His chart of the euro looks identical to mine, and he doesn't know what the market's going to do any more than you do. In fact, most of the guys with really big money don't want to admit that they're guessing more often than not. And if you really want an eye opener, all you got to do is take a look at our friend Bill Ackman, who is a quote billionaire hedge fund manager. He's earned an average of 7.9% a year for the past 20 years with his fund or funds that he's managing. The S&P has done better than that. In other words, he hasn't outperformed the S&P. I don't know about you, but I wouldn't get out of bed for 8% a year in this business. In fact, you should be looking at doing that every month, month in and month out. And the market opportunities available to a billionaire are significantly more than available to you. So how come Bill Ackman isn't laying it to waste? It's because he doesn't know any more than you do. He really doesn't. But he does the same thing you do. He studies the charts and he looks at all of this upside down and backwards, and he thinks he can figure it out, just like you do. But you can't figure it out because there's nothing to figure out. It's all the same data for everybody all the time. All the data points are the same for everyone all the time. You're not seeing anything different or new. No one is seeing anything unique or substantially different. Everybody knows when the news reports are going to come out that'll affect the euro or the yen or the interest rates or the indices. Everybody has access to all the same information, all the same data point going back tens, 20s, 30s, years, decades, centuries. It's all the same information. Everybody has access to the same stuff all the time. It's the same data for everyone. So where does the concept of long or short come from? How can you and me and everybody else out there doing this, looking at all the same information day after day, week after week, it's all the same for everybody. So how come you can look at the same data I can look at, and you will come to a conclusion that it's time to buy the market? And I will look at the same data and come to a conclusion that it's time to sell the market. So how do two reasonably intelligent people looking at all the same information both conclude equal yet opposite things? It's time to make money and the market's going to go up, so I got to be long. It's time to make money, the market's going to go down, so I got to be short. Where does that concept come from? If it's all the same data, think this through, guys. 2 plus 2 isn't going to be 6 on your screen and 3 on mine. How come it's all the same data, but yet you come to the conclusion it's time to buy, somebody else comes to the conclusion it's time to sell? All the indicators and oscillators are the same algorithms. You can put up moving averages and oscillators, Williams percent R and Andrews pitchfork and Fibonacci retracements on the same charts. It's all the same data. So how come you're coming to the conclusion it's time to buy and somebody else says it's time to sell? If everything is the same for everyone, where does an edge come from? Where do you get an edge? How do you get an edge if everybody's looking at the same stuff all day, all night, all day long? How come it's bullish for one person, bearish for another, neutral for somebody else? How come you can't just look at it and go, you know what? There's where the money is. Put your position on, take the money out, and go home. How come you can't do that? Because it doesn't work that way, but you think it does, and therefore you're making the same mistake everybody else is making. But you don't know that. And that's what we teach in netwinningtrader.com is we teach the illusions and misconceptions and all the other things that go with it. The fear, the evaluations, the assumptions, justifications, expectations, excuses, exceptions, all of that comes from inside your mind that has nothing to do with where the money is. But you don't know that. And that's why you keep spending all your time charting and never making any money, no matter how much charting you do. And what's even more frustrating to you is the fact that you'll do all this charting exactly the way you've been taught by the masters at their craft, like Steve Niesman and candlesticks. Whoa, he knows everything. And you make money with it. Then you do the exact same thing in a different market this week, and you lose money, and you can't figure out why. Because you didn't do anything different from one week to the other. So if it worked last week, why didn't it work this week? So now I'm confused. So therefore, I got to go back and learn this even more because I missed something. But what you don't understand and what you don't know is that all of that charting that you're doing, all of it is really a waste of time and it will always lead to losses. And if you make money using it, that's an illusion that you think you thought you understood, but you really don't understand it. And it's an illusion. And because it's an illusion, you're losing money consistently. See, what I'm suggesting to you is that 100% of losses, all the losses you're experiencing, they all come from the same place. You aren't seeing anything different than anyone else is. Therefore, none of you has an advantage. And this is why the more you learn about markets, charting, and analysis, the less likely you will ever be to make a consistent profit. It's just not going to happen. Now, you believe it will, though. And so we can have that conversation all you want. And I would love to open the door up to that. And somebody actually put it in here, something said trading is psychological. My thought is, why did you put that in there? Why did you write that? Trading is psychological. What is it about your psychology that's different than everybody else's? Maybe you'd like to share that with us. Because if trading is psychological, what is it that you've discovered that the rest of us haven't? You see what I'm saying? Because most everybody listening to this broadcast is losing, and you know you are. You got to stop BSing yourself and me. You know you're losing. You started with $10,000, and now you got 7, and that's okay because there's some excuse why that's okay. And then, but you haven't counted all the time you've invested and the money you've spent on education and training and books you've read and software. And if everybody listening were to add up all the money that they have spent out of pocket to learn how to do this and add that into their account balance, which is more than one of you listening has blown out more than one account already, and you know that. If you're tired of doing that, what you need to consider is that there's something else that you need to be doing and you're not doing it, and you need to find out what that is. The good news is I can give you a really good head start on that if you're willing to ask the right questions and you're willing to follow my lead. So I'm going to give you a little bit of that right now, and then we'll take more time if you have some more questions. So put the comments and the questions in there. And let's have a look here at what we're all so excited about, the charts. Oh my God, here's the charts. The charts. They're going to tell us where the money is, right? All right, guys, you know what this is? This is a 60-minute open high-low close of the euro, the cash euro, not futures, the cash euro. And as you can see, the market's made some changes in price. Now, my question is, what is it that you're looking at here? Do you know what's happening here? Do you know what's really happening here? Anybody want to offer an insight? What's really happening here? Why these prices are changing? Nobody? Anybody have an insight they want to share? Nobody? I'm waiting for someone to type something in. Nothing? RM says buyers and sellers. I'll accept that as a pseudo answer. Yeah, but what's really happening here? If you look at this from the left side to the right side, what's happened here is that 85% of the transactions that occurred here across this entire marketplace, no matter where it went in price, represented a loss to someone. 85% of the time, people are losing. 85% of the time. That means you are 5 times more likely to lose money on any given day than you are to make money. How are you going to beat those odds? I'm asking you, how are you going to beat those odds? 85% of people are losing, 15% are winning. All the time. How are you going to beat those odds? If you're going to tell me something that we all like to do, which is sell resistance and buy support, my question to you is, how do you define support? How do you define resistance? What exactly is support and resistance? How do you know when a market is making support or resistance? What are the clues? Anybody have an insight there they want to share? Now, I want you to look at this price chart because this is a price chart that I use every day to trade. Notice that there is no analysis of any kind on here, other than the moving averages, which I put up there for other reasons that we can talk about if you want. But I don't use anything on my price charts that you would be considered technical analysis. I don't use retracements, trend lines, support resistance areas. I don't use any of that stuff. You know, why do you think that is? I mean, if you're serious about wanting to learn how to make money and you're seeing something that might be considered unusual or doesn't fit in your wheelhouse, but bear in mind, there's a reason for that. Why is it that hard for you to understand that what winners are doing different than what losers are doing is something very small? That's why they're in the 15% and not the 85%. If you could understand that difference, wouldn't you want to know what it was? Now, some people that I've talked to, and again, you guys got to understand something, man. I've been trading for my entire adult life, and I've written trading programs and software and automated systems, and I've educated thousands of people. I've worked with all kinds of traders from all over the world with all different levels of starting experience. And I can tell you with absolute certainty that the problem is the reason most people lose at doing this is that they will not accept the fact that they have to change the way they think. They're not going to do that. They're going to sit at home and say, no, I am going to do it my way. I'm going to learn all I can about Fibonacci or Elliott Wave or whatever it is, because it can't be that simple. 85% of people are losing, 15% of people are winning all the time regularly. The losers and the winners must be doing something different. So, what are the winners doing different than the losers? And it can't be that simple. So, the people that continue to lose year after year after year are the ones that refuse to believe that it's really that simple, that there's something that they need to change in the way they view market opportunity and define market opportunity and how they manage their trade participation. Because they're unwilling to do that, they're more likely to lose. Now, I'm not saying you can't use all of those technical things and maybe make some money here and there, but you know, if you're Bill Ackman and you're making 8% a year, is that really why you want to do this? Is that why you're doing it? To make 8% a year on average? Not to mention the losing years, year in and year out. You see what I'm saying? What what I'm trying to help you understand is that what winners do and what losers do is different. So, where are the questions that you would like to ask me about what winners do that are different than what losers do? And let's see if we have any. RMC says, what about the previous presenters who use technical analysis and indicators and trend lines to make money on the same charts, which you have as blank? What about them? You really think they're doing as well as they claim to? I'm asking you, do you really think they are? I've been in this business a long time, and I've met everybody you can think of at one point or another. And I can tell you from personal experience that a lot of the guys that offer trading insights are not trading anymore. They're offering the insights. They have a business that they run on analysis, education, and training. They personally don't trade anymore. Now, I'm not saying that that's everybody that you heard today or over the past couple of months with the Timing Research show. I'm not saying that. I'm saying that I think you need to be suspect and be ready to accept the fact that a lot of guys make a ton of money selling loser training manuals. They make a lot of money selling books and tapes and series on how to get better at losing your money. They really do. I'm not saying that that's the people you heard today. I'm saying maybe you ought to think that through before you spend another $500 on somebody's system or before you join a chat room for $89 a month. See, you really need to understand something. It's not my opinion. 85% of people at any point in time they're losing in this business. If that's you, ask yourself the question, what is it that I'm missing? That's the question you want to ask yourself. Because, see, like most people, you think the problem is outside of you. You think all this charting analysis and study is right around the corner, and I'm going to find out what I need to win, and it's right around the corner. It's something I haven't learned yet. That's what you think. Most people think. But the problem isn't outside of you. The problem is inside of you. The problem is how you think. The way you think is creating your losses, but you don't know that. You think it's the way you chart and analyze the markets. See what I'm saying? That's the subtle difference. Maybe the guys that you've been watching and listening to are doing Wow, just huge amounts of money from the markets. Wow, good for them. But when you join, how much money are you making? And what's the difference between what you're doing and what they're doing? Can they put that in terms that make sense to you? Why is it that inside their chat room, they have all these people saying how wonderful they're doing and all the money that they're making, but in reality, you're doing the exact same thing and you're losing. So what's different? Why is there a difference there? Should that be something that is discussed? You follow me? One of the things that I'll absolutely promise you, as someone who does care about whether or not you win or lose, is that all of the education and training in the world is never going to help you make any money until you change the method of thinking that you bring to the table. That is an absolute fact. Now, I had an opportunity when I was younger to have a life-changing experience with regards to my approach to participating. And I didn't realize how significant that was. And I met a wheat pit trader at the Series Lounge and Restaurant in the Chicago Board of Trade. And we started talking about the markets. And he said, listen, I'm going to just share with you how this is done. And if you're serious, you'll listen to me. And I said, okay, what is it? And he said, look, here's the bottom line. And this is where all the money is. If you're willing to listen to me and apply what I tell you, there's no reason why you can't get rich in the next year or two. Great. I'm listening. I'm all ears. Here's what he said. When everybody's buying, look for a place to sell. When everybody's selling, look for a place to buy. And that was it. That's the secret. Now, everybody listening already has gone through this in their head. No, 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 I knew that. It can't be that simple. There's something else involved. No, that's it. When everybody's buying, it's time to sell. When everybody's selling, it's time to buy. Now, how do we know that? Well, right here. Look at where the market turned right here in Euro. I'll just go ahead and put it up here for you. This was last week, 2 weeks ago, actually. Whoops. Whoa, I got the big number there. Right here. Right there. Let me take the axis off here so you can see this a little better. See that? This is where the buyers stepped in and took control of the market. Now, that doesn't mean that the buyers made money. What that meant was, see all these people that sold right here on this bar? This is them getting out over here at a loss. That's what that means. So anyway, the point I'm making is that when the market found a low print and started to rally, you're looking for a place to sell. Pick a number. Would that price made money? What about this price? How about this price? Let me ask you another question. Would this price have made money if you were on the sell side? When everybody's buying, you're looking for a place to sell. When everybody's selling, you're looking for a place to buy. Right? From this point all the way down to here, everybody's selling. Where's the buy point? Well, when you find it, what do? Nothing. You sit on it and wait. When you find the sell point, you sit on it and wait. This is what we teach in Net Winning Trader. If everybody's buying, you're looking for a place to sell. Any one of the sell points along the way here, on the way up to this high print, would have made money by today. If you had done what? Nothing. Just sit on it and wait. But see, you're not taught to do that by all these chart heads and tech heads. They're all telling you that you got to be in and out in 2 minutes, 3 minutes, 5 minutes, 7 minutes, 10 minutes, 15 minutes, because that quote reduces your risk. You got to wait for confirmation because that quote reduces your risk. When in fact, you don't even know this, but it's increasing your risk. The probability of you losing money by operating on too small of a time frame is almost 100%. But that's what they're teaching you. And why are you listening? Is my next question. So if you were to say, well, wait a minute, if everybody's buying, I'm looking for a place to sell, where was your opportunity on the sell side? Look at this move. Covered the entire move to the upside to the downside in 3 bars. Well, were you looking to get short up here? No, you were looking to get long. Why? Because you're waiting for confirmation and the market's moving higher and the trend is your friend and the moving average is crossed and this, that, and the other. You're going to test the moving average here and blah, 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 blah. But you weren't selling into the rally where the money was. You see what I'm saying? The difference is a mental focus towards where the money is, not what the market's going to do. What most losers are trying to do in this business is they're trying to predict where the market's going to go next. You follow me? What the winner is trying to do in this business is anticipate what the loser is going to do next. See, the winner wants to get better at controlling his behavior. The loser wants to get better at predicting where the market's going to go. That's two different things. If you traded with no leverage for a 200-point move in the marketplace, you would make a lot of money. So why not look for the 200-point move instead of the 5 or 6-point move when you're leveraging 30 to 1? You see what I'm saying? Because your leverage is what's costing you your fear. You see what I'm saying? Okay, a couple of notes in here. Something to be discussed. Some Jay Davis says, good. TJ says, it sounds simple. That's right. Stoya says, I do listen. To what? DJ Davis says, again, where others sell, you don't buy at that same location. You can now look for a reversal. Why not buy at that same location? If the seller is going to be wrong and have to take his loss, then a buy side is going to work. So you need to be trading against him at the price he's entering the market at. You see what I'm saying? Here's the important thing that I just really, really wish I could communicate at like the highest possible level to everybody listening, is that losers in this business are watching the market. Winners in this business are watching what the losers do. It's two completely different things. The loser is trying to figure out what the market's going to do, and he's using all of these different methods of analysis and hyperbole and opinion to try to figure out what the market's going to do next. That's what he's doing. The winner is just simply watching what that guy does so that when he puts his position on, he just simply goes the other way. That's all there is to this business. There's nothing more. It doesn't matter what the Fed does, doesn't matter what the crop reports are, doesn't matter what you hear from the talking heads on CNBC, doesn't matter what any of the other traders out there have to say or what their opinions are. None of that matters. Doesn't matter what the charts say, doesn't matter what the overbought, oversold indicators say. None of that matters. The only thing that matters is when the loser puts his position on and he's going long, you're looking for a place to go short against that. When the loser is going short, you're looking for a place to go long. And that's all there is to this business. That's it. That's all there is to it. There's nothing more. If you stop to think about how this business plays, you'll understand why I say that. Because we're in a zero-sum transaction market, which means For every buyer, there's a seller, and for every seller, there's a buyer. And most people don't really go any further than that in their thinking. But what they don't understand and what they don't really realize is in order for you to profit, you have to take that from another trader. That means if I go long, somebody else had to sell it to me. And if my long makes money, if I make money in the market, then the short seller who sold it to me, he's losing his cash debit from his account is transferred to my account as a cash credit. That's what the clearing firm does. The clearing firm debits his account, takes that money, and gives it to my account. So if in order for me to profit, I have to be on the other side of the losing trader. So does it really matter why the losing trader got short or long if he's wrong? Does it really matter if he studied all the charts until his head's exploding and he's got 2 or 3 in series linked Cray supercomputers that he bought at some Air Force garage sale, crunching numbers? Does it really matter? No, it doesn't matter. He's on the wrong side. He loses. I win. That's all I care about. So the only thing I'm interested in is where is the loser? What is that guy doing? Because I want to be on the other side of his trade. So if we look at what's happening in Euro right here, what do we know happened right here? This is where the seller lost control of the market. And as market prices advance, because the buy orders were larger than the sell orders, the loser, which is the seller, started to panic until he drove prices up to here against himself. And that's that. So the loser who's buying the market, you want to sell into that. Any sell in here anywhere would have worked. You see what I'm saying? TJ says, so in other words, what the losing group of traders tend to do, well, what the losing group of traders tends to do, all right, here's what the losing group of traders tends to do. They trade on a time frame that's too small. They're looking at this. See this right here? I'm going to just draw a picture for you. Let me just, all right here. The perfect example. All right, you see this right here, this square right here? We're going to go to the 5-minute chart, and we're going to find that square. It's all the way back here somewhere. I bet it's over here. A little further up. Oh, wait a minute. This is 105. What happened to my square? 409. Okay, let me go back to the 5-minute chart. Let me go to 409. Bear with me while I find it here. There's 409. Come on, 409. $329. Where's 409? 401, 402. Here we are. There's this drawing right there. See the line? I think that's it. 403. No, wait a minute. 409 is a little further along here. 408. 409. There we are. Okay. Okay. So a guy in a 5-minute time frame is watching this. And he sees the market just get crushed right here. But it came right back to support. And the moving average is crossed right here. So this is a buy. This is a buy right here. But he bought up here, market went against him, he got lost. This is a loss for him. So he waited till here at this point. didn't get a chance to get in because he waited for confirmation too long. This scared him out. So now he's going to go back to the charts and he's going to wait for support. And now the market crosses here on the moving averages. So he looks to go short on the touch right here. And that doesn't work. So now he's going to go long here. That doesn't work. You see what I'm saying? He's trading on a time frame that's too short, but he doesn't know that. So he looks at price opportunity inside what would be considered random noise by the big player. The big player is saying anywhere in this box is an opportunity to go short. That's what he's saying. But the little guy is trying to figure out when to go long, when to go short, when to go long, when to go short, close out 5 trades today, look for a 10-point gain. That's partly why they're losing, right? Take that off of there. Okay. What the losing group of traders tend to do. Yeah, well, there's a lot that they tend to do, TJ. They tend to trade on the wrong time frame. They're too short a time frame. They look at the wrong things. They wait for confirmation. They use technical analysis to the point where they stop thinking on their own. They don't ask the questions like how did prices get to this point? Who's the loser? Who's the winner? How do I stop being the loser? They don't ask questions like that. They keep asking, how do I get better at my analysis? What am I doing wrong? How come this isn't working? They're asking all the wrong questions. So that's partly why they're not working in a favorable manner. Story says, so if I don't take the money from the losers, someone will take it anyway, as the losers are losers. Yes, they're going to take it from you because you're the loser. See, they're taking it from you. You have to ask yourself, why am I losing? What am I doing that's putting me in the same exact losing group as everybody else? Why is that happening? You have to ask that question. See, what I'm trying to do is offer you something different. Let me ask you to go back to here for a minute. I want to offer you something different. Where do our profits come from? See, they come from the losing trader. So all we need to do is be concerned about what the loser's doing. That's all we need to do. We don't have to worry about the rest of the stuff. We can become an expert at what creates losses, and then do the opposite is a great way to begin the pathway of true understanding, right? That's where the profits come from. What is the loser doing, and how do I take my position against him? If we don't do anything different than they do, how can we win? That's the whole problem of shared data. You're not doing anything different with the information that you're presented with. You're doing the exact same thing that everybody else is doing. Really think it through. Every person out there has the same information and they're all looking at it the same way. I don't do this anymore, but I used to do this a lot. I would take classes from people that were in the education arena. And one of the ones that I took was, probably you've heard of this one, is the Online Trading Academy. Anybody ever heard of the Online Trading Academy? You guys ever heard of that one, the Online Trading Academy? A couple of guys typing in, yeah, okay. So I took the Online Trading Academy basic weekend, spent a few $100 and took the weekend. I wanted to see what are they teaching the loser. So they're doing their basic thing and they're teaching very basic technical analysis. And then I asked the guy at their lunch break, how many students have you guys had? And he was very proud to tell me, well, over 250,000 people have completed this level of coursework with the Online Trading Academy. So what, you're teaching them all the same basic things? Yes. So 250,000 people have completed this basic course and they're all taught to do the same thing at the same point, the same way. So I set up my chart at home. I called it the loser chart. And I set it up exactly the way they taught me at Online Trading Academy. And I knew that when that chart said buy, there was a real strong probability that there were 250,000 other people out there all going to jump in on the buy side, and they're all going to be wrong. You see what I'm saying? Do you understand what I'm getting at? I went out and directly found somebody who's teaching people to lose and asked them, how do you teach people to lose? And they showed me, and I could use that loser chart very accurately for years to position myself on the other side of the market. It was all 5 minutes, 7 minute charts, oversold, overbought indicators, little trend lines that went up to failed wedges, all that crap. You see what I'm saying? So if you don't do anything different, where's your edge going to come from? How are you going to win? You can't. Let this really run through your mind, guys. Let this really, I mean, seriously, let this run through your mind. Losers study the markets, winners study the losers. TJ Davis says the only problem with that is that most of all these so-called teachers aren't teaching worth. Well, yeah, well, that's true. So I can understand how frustrated you would get. And I spent years being frustrated. I quit counting at around 60 grand, but I probably spent $100,000 or more out of my own pocket on education, training, books, tapes, series, weekend retreats, specialized systems, private seminars, anything and everything that you could think of. Because you got to remember when I started my trading career in the 1980s, there was no internet, there was no email. What you can get for free today dwarfs what I spent hundreds of thousands of dollars on. Didn't make a bit of difference. It's not any smart, it's not any better than it is then. Now, let me ask you a question. Can anybody tell me who is the world's greatest stock trader? The guy who's remembered for being the absolute single greatest person who ever traded in the markets. Who is that? Anybody know? Anybody want to answer guess? DJ Davis says, I don't care. Well, it's too bad for you. Story says Soros. Nope. Anybody else? Nobody else wants to offer anything? Guy's name is Jesse Livermore. Livermore made $100 million in one day back when $100 million was a lot of money. Generally considered to be the greatest trader that ever lived. He had year in and year out, 30, 40, $50 million in profits. Traded his own account, his own way, never listened to anybody, did his own thing his own way. The only thing he cared about is who was on the other side of his trades. He wanted to know who that was. It's the only thing he cared about. Jesse Livermore. There we go. A bunch of people throwing it out there. Good news. If you don't know who Jesse Livermore is, you really should read his autobiography. I use his autobiography, which is Reminiscences of a Stock Operator. I use that book as one of the textbooks in my psychology of trading course when I teach it to traders around the world when they're able to make a 9-week commitment. And in that book, he talks about the relationship between winning and losing and what really makes all the difference. And the reason I asked about that, um, I mean, I'm not trying to be problematic to you. I'm telling you what he said. What Livermore said was he thought people who use charts and analysis were pet monkeys or freaks because they never made any money. He never knew anyone that made money using that stuff. What does that tell you? This is from a guy who, okay, let's boil this down to the absolute essentially ridiculous and ask yourself, Why isn't your account balance growing? Livermore wrote down what he did. He wrote a book called How to Trade in Stocks. Now, you would think that the guy who made more money doing this as an individual trader than anybody ever in history, before or since, if he said, here's how I do this, you would think people would want to know what that is. And if you read how he does it, the book itself, I have my copy right here. It's so incredibly thin, nobody wants to believe. They His book, How to Trade in Stocks, is half the size of Soros's book, Alchemy of Finance, which is complete bullshit in my opinion anyway. Now, how come nobody uses the Livermore method to get rich in stocks anymore? How come they don't do that? Because they'll tell you, well, that's old, that's outdated. The markets are different now. Things don't work the same way. Blah, 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 blah. When in fact, the guy who made more money doing this than anybody else ever said, here, do it this way. No one will listen to him. Why is that? One of the greatest traders of recent memory, a guy by the name of Richard Dennis, Chicago native, trading god, taught the turtles, took 27 guys, handpicked them, taught them how to trade. All of them except, I think, two retired multimillionaires. He said, I could take my trading strategy and publish it on the front page of the Chicago Sun-Times newspaper, and people would lose money using it. Fact. I mean, you guys, do you understand where I'm going with this? If you want to make money, if you're tired of losing, you need to change the way you see this business, and you have to make some changes to what you do. That's a fact. Now, why won't you make those changes is another issue. And why do most people not make those changes? That, my friend, has been the question I've never been able to answer. You put 10 people in a room that are all losing and say, I will show you exactly how to make money doing this, and 9 of them will give you an argument why that won't work. So where are you at? So if you're willing to make some changes and you're willing to get serious about what you're doing instead of BSing yourself about what you're doing, I'd like you to give me a call. I want you to consider me your friend in the business. I'm going to provide you a complete program that's designed to assist you in making a transformation from losing trader to winning trader. My program that I offer will challenge you to put aside your current method of trader participation and adopt a winning method of trader participation. Once you make the change, your results could improve exponentially if you're willing to apply it. Here's where you start, netwinningtrader.com. I'm going to put right here in my chat window. Here's a link to a free ebook that I wrote an article for that includes a video that talks more about this. If you're interested, it's all free. All you gotta do is download it, have a look at it. There's a whole bunch of other guys in that free ebook that all talk about charting and how wonderful it is. You're welcome to waste your time with those guys too. But in my opinion, if you're serious about wanting to change what you're doing, it's time to make a change in your thinking. Now, I'm not saying that every single thing you know about charting and technical analysis is wasteful. I'm not saying that. What I'm saying is you are the one who's losing. You're losing because you've got an overabundance of confidence in something that doesn't make the difference. You can still use things from what you've already known, but it's not going to be at the same level for the same reasons. And I'm going to show you a different way of using the same information, what we call shared market data, so that the loser is no longer you, it's somebody else. It's your choice. You can become more successful at this than you ever thought possible, or you can keep spinning your wheels. It's up to you. Okay, so that being said, we got a minute or two for comments and questions. Right about here is where the hate mail starts. Let me give you my email address so you know where to send that. You're more than welcome to consider me your friend in the business for those of you that are seriously interested in what I have to say. And I'll be happy to answer your comments and questions as well as get you started with my program if you're interested in making the bigger commitment. But I will take some comments and questions right now if you want. If you want to take a minute. David says this. He says, "You lost me. Sellers are winning until the market turns up and then they're losers. So what shows you it's time to fade them?" Okay. The easy answer to that is you have to understand market structure, the timing between winning and losing. That's called time compression, which I teach in the course and I wrote a book on, and the relationship between the late participant. The person who's late drives the market against the losing trader. In other words, the late seller has to turn buyer faster. When he does that and draws in brand new open longs, the brand new open longs that are going to win represent 15% of the market. They're not big enough to drive the market price. So they push the market to a point where the remaining shorts have to make a decision. They've given back their gains. They need to make a decision. Or they've let a winning trade become a losing trade and they have to make a decision. That point is called the loser liquidation point. When the loser liquidates, that market is going one way until they're done. When they're done, that's when you play. You need to understand the concept of secure trend, secure range, breakout range, and then what would be considered the unnatural state of the market, which is order flow balance. Once you understand order flow imbalance in relationship to order flow balance, you know when a sideways market's about ready to reverse course, and you can participate anytime you want in that direction, or you can fade it when it's done at the end. You can do it either way. And one of those things that we talk about is called the 12 choices in participation. You have 12 choices you have to make to participate. Most people think there's only three. They can either go long, go short, or stand aside. Wrong. There's 12 things you got to decide. That's why most people don't make the right one, because they don't know that it's not that simple. It's not go long, go short, stand aside. There's a whole other group of things going on there that you need to be aware of. And that's why the winning trader knows why to sit tight and when to move, because he's waiting for those choices to narrow down to the single most significant, which is the highest probability. And you have to think in terms of probability, not look for a sense of certainty, which is another thing we teach. Good question, though. TJ says that sounds deep. Yeah. Well, you want to make $100 million this year, or do you want to sit around talking to your buddies about how you could have been successful? The price you pay. Look, the price of knowledge is the destruction of illusions. If you want answers, you got to let go of the crap that's preventing you from getting the answer. That might be painful for some people, but it's okay. And if you think it sounds deep, maybe it is for you. That's okay. I think you'll be surprised once you learn what you need to learn. It's not that complicated. It's really very simple, I think. But that's me. Comments, questions? We know where to send the hate mail. What else? Anybody else want to take a few minutes? I know that David always likes to have me uh, in his broadcast probably once a month. Um, David, I'm always wondering, you know, a lot of what I talk about could, could really bother a lot of the people that you have as regular presenters. So I don't know if you're getting that negative feedback. I hope that you don't.
No one's complained so far, but
Ah,
that's kind
that's
of
good.
the whole thing that I'm trying to go for is have a broad range of opinions and insight so that the audience can have one place that they can come to get it exposed to, a
Well,
variety of different ideas.
yeah, well, I gotta tell you, I know that a lot of what I talk about flies in the face of what everybody thinks is normal, natural, and everyday, humble. But um, I, I'm just glad to be back, and I have a forum for you. That's why I'm enjoyed doing it.
Yeah, I love having you here.
We've got just another minute or two left. If anybody wants to put a second out there, TJ says the Richard Dennis thing. If he put it on the front page, why would they lose? What is the reason he said that? Okay, that's a great question. The reason being, the reason Richard Dennis said that is because after you know him creating a winning approach, knowing what it was that he needed to do to win, he knew that people would read that and not understand it and attempt to apply it like they would everything else they already do. In other words, if the only tool you have is a hammer, you tend to see every problem as a nail. When Dennis would talk about things like you have to know how to hold your winners, and he would say if the market did X, I would hold that till the weekend. Well, there's people that would try to do that on Wednesday, and by the time the market got to Thursday afternoon or early Friday, they've never held a trade that long in their whole life. They're scared to death of what could happen over the weekend. So they'll close the trade before the weekend and then miss the opportunity for the market to gap and run on Monday. You know what I mean? They just don't see it. They're not deep enough in their thinking to understand why it's okay, to let your profit run. That's just an example. It's their thinking would get in the way of understanding the rule set. When he'd say, if A happens, do B, people have these reasons why they can't do B. That's too big for them, right? So when he said I could take my trading system, put it on the front page of the paper, and people would lose money using it, that's what he meant. Is that they would break the rules, they would not follow it. When he said it's time to buy, they would argue that, and then they would sell, or they would stand aside. Then the market would make some big move and they'd chase it. So a tiny little pullback now gives them a loss when normally they would have had a profit if they would have just done what the rules said to do 2 days ago. You see what I'm saying? The problem isn't the system. The problem isn't the rule set. The problem is the person. The person doesn't follow what they're supposed to follow. That's where the problem comes in. So it's not that people are bad or that systems are bad or that there's, very hard to make money. None of that is true. What's true is that people tend to second guess things, and they tend to rethink things, and they tend to be in fear, and they tend not to do things that they should do. Those are common problems. So you have to address those things more so than your systemized approach, because you could have the greatest system in the world, and if you won't follow it, how can you benefit from it? You know, Dennis's system, actually, for those of you that aren't familiar with it, Dennis's system is exceptionally simple. I mean, okay, his systemized approach was based on two people's understanding of the market. Jesse Livermore's understanding of you buy high and sell higher. The concept the market needs to be moving in one direction before you participate. And then you add to those winners consistently. Livermore was a big believer in that. And the second one was Wyckoff, who understood the relationship between volume and spread analysis and understanding that there has to be somebody playing. You got to be playing. There's got to be somebody in there for this to work, right? So volume spread analysis, when applied to futures, that later became what we call commitment of traders and um, um, uh, commitment what do they call it at the Chicago Board of Trade? They called it the Um, positioning and liquidation awareness. Oh, I can't remember now. Anyway, it was available to pit traders. It wasn't available to the public. But anyway, the concept that he worked on was basically once the market has gone bid, you stay long. That's it. So he never he would have trades on for years, literally years. Buyer of soybeans at $5, ride it to $6, still in it when it dropped back to 5.25. And 2 years later, when it was 7 or 8, he's still in it. That's how Dennis traded. So would the average typical person be able to sit through that? No, they wouldn't. And I'm not saying it's good or bad. I'm just saying that's what he did and it worked for him. And he said, people won't do what I do. He was right. That's what that means. All right. Anyway, any other comments or questions? By the way, I still don't know how many people we had in here today. How big was our audience today? Because I don't see that somewhere. I don't see how many people were in the chat room. How many
Um,
oh, David, can
there's
you
yeah, there's 34 right now, but there was
34? Okay.
about 45 when you started.
45. Okay. All
Usually,
right.
yeah, when we get to the end of the day here at
Yeah, I know. Most
yeah,
people don't want to stick
Wayne's
around
good.
this long. Yeah. I don't blame them actually, if the truth were told. But, if you want to take another minute, we can. Otherwise, it looks like we're done for now. There's not a lot of comments or questions coming in. People are probably all burned out from having to spend all day listening.
Yeah.
All right, all good.
Um,
So I guess if we're done, um, no worries. Thanks again for having me.
all right. Thanks, Jason. Yeah. Thanks for closing out the day for us.
Yeah, my pleasure. And I'll look forward to seeing you guys again next time. And I promise I'll be just as problematic.
Okay. Sounds good.
All right, man.